For the business sector, confidence has actually been not as weak through 2024 as what we've seen for consumers. And one of the reasons for that has been the stronger population growth, really supporting demand growth for business goods and services. And there are some positive signs through 2025 as well. So while population growth is slowing, it is still pretty solid. We're still seeing capacity utilisation rates above average, so there's still quite a bit of demand out there. And also, importantly, we've seen input cost growth slow and stabilise at lower rates. So those are all positive signs. On top of that, the expected recovery in household spending growth should support some of those discretionary sectors for businesses, particularly some of the retail sectors, for example, hospitality, that sort of thing. We're also expecting that when rate cuts start, we'll see construction activity start to pick up, particularly in the housing sector, start to pick up in the second half of 2025, supporting those firms. And then there's sectors like manufacturing, which are quite rate sensitive, which will benefit from the falls in interest rates as well. So overall, while we've seen business Capex plans soften recently, they should strengthen again, particularly in the second half of 2025 in response to these shifts. One of the big unknowns for 2025 is the tariffs that could be introduced by the new Trump administration. Now, for Australia runs a pretty large goods trade deficit with the US, so we may not actually be much of a target for US tariffs. Even if the US does introduce tariffs on Australian exports, a lot of our exports can be easily diverted to other trading partners. The bigger risk for the Australian economy would be if these tariffs triggered a broader trade war which disrupted supply chains and trading patterns and could lead to higher prices for Australia's imported goods. That's probably the bigger risk that we see. Another risk for 2025 is the slowdown that we're seeing in China. So our China team is now forecasting that GDP growth will slow to 4.3% in China in 2025. Now, this would be the lowest growth outside of the pandemic since the early 1990s. All else equal, this could put downward pressure on Australia's national income growth. But Australia has the opportunity to respond, either by shifting trading patterns or, for example, trying to improve productivity.